Repeal, replace, lost in space. The airlines get dumped, and the transport's laid to waste. And the FANG stocks, the saving grace. All that and more when we get into the show.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. Well, happy anniversary to me. This is now 2 years since we've been doing the askSlim show in this format with our membership site. Just absolutely amazing, and big thanks to so many of you out there that are great loyal members that have been with us for these entire 2 years. So many people signed up as soon as I left that other network and then went off on my own and are still with us. And of course, thanks to all the people that came along the way that have given us such great support. So excited to tell you that this is the date of our 2-year anniversary when this membership site started. So really excited about that. All right, the stock market this week was mixed as tech stocks remained strong, but then the rest of the market got pretty mixed. The Dow, it sank as IBM and Goldman Sachs and a couple of the other stocks in the Dow Jones Industrial Average really weighed on it. IBM, some disappointing earnings. Goldman Sachs just doesn't seem to be able to make any money on the trading side anymore. And overall, the financials were mixed. The transportation average was notably weak as the airlines and rails got sold pretty hard, and that might be a sign. I've got something to say about that in just a few minutes. The ECB, they joined in with Yellen on this dovish talk that we've been hearing, and they held their policy unchanged. That got the bond markets firm really around the world again, and the U.S. Bond market here has gotten stronger. Also, Draghi came out and said that basically if they're wrong and things get worse, then they're ready to start buying up bonds again. So nothing in any of these statements in these last couple of weeks from the central banks that says anything at all about interest rates going up very quickly. And you had a hint from the ECB some months ago that they were getting ready to do some significant tapering and change things, but that's not the case either, as apparently they see weakness out there in the economy, a lot weaker than anybody expected. And some of the local feds had their growth rate up around 4% for the second quarter. It has now been lowered pretty significantly, where they're now looking at just over 2% for the quarter. So here we are still stuck after 8 years of 0% interest rate policy, just under or just over the 2% growth rate, which is terrible overall. And this is an expansion that is getting really old, and recessions come, and we wonder if they have any bullets left to do anything if problems do arise. So the stock market for the week mixed. S&P 500 up fractionally. The NASDAQ is stronger, up just over 1% on the week. The Russell just small to the upside also, and the Dow Jones Industrial Average fractionally lower. So it was a mixed week in here, and while there's been a lot of churning going on, the broad market has been able to edge up to slight new highs, but it wasn't very dynamic at all this week. Now, the bond market gained over 2 points on the 30-year, and you can thank the ECB on that, and that actually stimulated selling coming in the dollar. Now, the dollar dollar has been accelerating to the downside. We have 3 out of 4 weeks out of the last 4 weeks that have been very bad weeks for the dollar, as the dollar has moved down to 94. That is just immense weakness that we have seen in there, and these prospects of lower rates coming are bad for the dollar, and certainly the surprise that might be out there is that, you know, all this hawkishness that we had heard about higher rates and better earnings for the banks, and the fact that the economy was going to grow and everything was better. I think it's a bunch of hooey, right? Because now we're starting to get the central banks commenting in ways that just doesn't seem like they're expecting to raise very much more at all. So while the dollar gets weak, gold firms. That's typically what happens in the inverse correlation. Of course, as dollars get cheaper, it takes more dollars to buy gold, so gold then moves up related to the dollar. So that was some $24 gain. I'll add to that silver jumping about 45 cents. So that was a really strong week for the precious metals. Even copper was strong. We did not expect the bond market or the gold market to be able to get up as far as they did, and we said that on our short-term view last week, and we didn't have a great week as far as analyzing the real short-term patterns because of the surprise, really, of the ECB and the shocking downgrades that we seem to be getting here on the growth here in the United States and really around the world. So oil, which had been firm, got into a resistance zone. That one we got right, and that fell over $1 as there's talk about OPEC supplies being an issue, as supplies apparently are growing, and they're expecting that the July numbers are going to come out with inventories higher there. So the oil market then just did start to dip on this fear of increasing supplies again. This glut just doesn't seem to go away. So I want to take a little technical look at the market. Let me just get a little thing set up here for you. Sometimes I bring, comments about the markets or the background news. Sometimes I like to bring things that are technical in the market. And we're gonna take a little look here now at the technical aspects of the market, and we're going to take a little historical look at the technical aspects of the market. How's that? I want to talk about a pattern called a broadening pattern, a broadening top. There's broadening bottoms. Also, they call them megaphones also. And those tend to be, on big patterns, pretty significant because what it means is that there's a lot of larger swings going on in the market in both directions. And then eventually what happens is that on the last swing, on bottoms it would be the last sell-off, and on tops it would be the last amount of buying that comes into the market. Then what happens is that the sellers or the buyers get spent. Essentially, they put everything into the market, or on the bottom, sell everything out of the market, and that essentially makes the top or makes the bottom. I want to show you what that looks like when we look at a couple of different periods here in the market. Now, this chart that I'm showing you is a weekly chart that is covering the time period back from 1999 to 2009. Why do I have that? Because, well, it has the beginning of 2 bear markets in it. Now, I want you to see right over here the beautiful broadening top or megaphone top. You can see that right there, and you could see the same thing right in here. So essentially what happens is that the market, gets volatile, chops around, as you can see, and then one last bit of buying comes in, and all the buyers get spent, and then the market tops and you go into the bear market. You can see that right there. You can see right over here something similar. It was a smaller pattern, but the same thing. They're all moving up and down, and then the last move up in the market, then the market gets spent, and then, well, in this case we went into a crash because of the financial crisis. However, the story is pretty much the same, how those 2 tops got made. So that's the Dow Jones Industrial Average. Let's take a look at the same period period here in the S&P 500. So you could see how, you know, their broad market pretty much did the same thing. A megaphone top, and you can see the top formed right in there as the last buyers came in. Megaphone top right over here, and you could see as the last buyers came in. So you could see that both tops in 2000 and 2007 were pretty similar as you look at that. Megaphone tops, right? So now what I want to do is take a look at current patterns, what's going on right now, and we're going to take a look here at a few other patterns, a few other charts that I think are significant as we put up our chart that I always show of the markets, which is the weekly charts with all of our cycle analysis on there. So I want to get that chart up for you, and I'm going to switch this over to the look at 3 different charts. We're going to start out by looking at the Russell RUT, and this of course has all my cycle analysis on it and all the phasing on it and everything, but I still want you to see what's going on in here. So just like I showed you in that last in 2007 and 2000, the thrashing as it moves around up and down, and then one more surge to the upside near the top, and you could see the megaphone top right there that is forming. That's pretty dangerous, and when you see that compared to all of these other tops that we have seen in those other years that bear markets followed, well, you've got to be cautious, at least think that, well, that has to be meaningful. Let's take a look at the NASDAQ, NASDAQ right in here, and let's just look at these this last surge right in here. Look at that, the megaphone top forming also in there in the NASDAQ as this thrashing up and down comes, and then one more move to the upside as they buy the FANG stocks like crazy, and well, that's your megaphone broadening top pattern that you see forming in there. And let's take a look at the Dow Jones Transportation Average, which I started out the show talking about the amount of selling that came in. So it had a pretty good down week as the airlines and rails got sold. You could see that right there. And here is your beautiful thrashing and your last move to the upside. Is it the last move? Well, you can see in there that it sure does look like a megaphone top when you look at that. And of course, this would now be, if it turned out that, you know, this bull market was ending right here, that it is the top of a pattern in here, or the top of a market that is formed by a megaphone top, 2000, 2007, and now we have them in this year. With the market going up, everybody is bullish. Everybody's got a good idea that the markets never go down because the central banks, they've erased all of the possibility of declines. 5% decline in the last year, none. Well, we had almost a 5%, 4.9 or something like that, but on a closing basis, no 5% decline for the stock market in the last year. That is extremely unusual. You think there's a reason for concern? It's a megaphone top. What are you waiting for? This is the time to start reducing your risk, your long-term risk in the market. I think there could be trouble there. So that is a look at megaphone tops. Let's take a look at what happened in the stock market in this week as we look at the 60-minute chart of the S&P 500. We do this every week where we look at what was driving the markets during the week. And here is that 60-minute chart right there. And you can see in here as we look at the movements during the gray area, well, nothing happened Monday. Nothing happened Monday during the day. And the news was China GDP beat. They got a little bit of a rally going on that, but their exports, they said up 3.9%, and that's versus 10% a year ago. I think they're liars. What do you think about that? And China, because of those good numbers, the stock went down because of fears of more tightening. UBS came out and said that Amazon will be 1,600 in the next 12 months. Well, who could argue, right? And Bitcoin fell to 1,800 and then popped. And would you believe it went from 1,800 up to over 2,700 this week? Talk about a range. Talk about craziness. Well, wow. Tuesday came, and well, Tuesday, it was really Monday night that the news came out that the healthcare plan was dead, or I said basically lost in space. And so the markets were, basically weak on that. They opened lower, but then there was a huge uptick as Netflix was driving the NASDAQ on the upside as they had reported earnings. Their international subgrowth was monstrous. And their PE now well over 200, so talk about monstrous. They have an $80 billion market cap, and they missed and earned 15 cents last quarter. I'll take a look and show you that chart later on, as the stock exploded on 15-cent earnings based on, well, growing strongly in the international market. The Friday came and world markets, they were on the rise again. In fact, overall, the run that we've had in the world markets is the best in over 2 years. IBM was down and hurt the Dow as they continue to struggle, but you can see a big upside move in there, pretty strong. Friday was the ECB news right over here. You could see there was a little volatility, and then the markets broke early, but buyers keep coming back. You can see that ECB policy unchanged. Their whole commentary on inflation and buying the bond market was confusing, and the bond markets had some pretty big swings, but were strong overall during the week. As they said, they're ready to buy more bonds if things get worse. Well, talk about mixed messages. Holy cow. And the U.S. stock market basically ended narrowly mixed with a lot of chop going on. Now, overnight, we got some selling going in here. The DAX got sold pretty hard, almost 1%. And oil turned weaker on that report on OPEC supplies. But the stock market, which sold off early, we had the NASDAQ down over 20 and S&P's down about 9. They have rebounded as usual to just some pretty small declines in here as we get towards the last hour of the day, and the market basically just modestly lower after what has been another one of these weeks where the market has had an upward bias, though the upward bias has been somewhat muted. We had talked about the S&P 500 stalling up at around 2470. It actually got through there by about 5 or 6 points. And now is just modestly lower today. Not a lot going on. Here is our calendar for the coming week. A lot of earnings coming out. I'm not going to read them all to you, but if you take a picture of this, this is all of the major stocks widely held and the things that we follow in here. So there's just so much coming out in here, and people are going to be watching pretty closely. Google after the close on Monday is a big one. We have Amazon coming out after the close on Thursday, so that's another of the really big ones. Those are probably the two biggest ones that people will be watching because, well, that's FANG stocks, and everybody watches them really closely. So those are the big ones. No huge economic events in here this week. Maybe the GDP number might cause some bond market movement, which is on Friday. Besides that, there's no real market movers in here except for Wednesday. So I don't have that marked off. I really wanted to mark that off, where the Fed, FOMC, that they just announced their meetings. They don't that can't be a Fed meeting, so I don't know what that is. FOMC meeting announcement, so that can't be the release. We just had one, right? So that must just be their announcement of what the dates are for the meeting. So I have to look at that. I should have looked at that before, but I got to admit that I didn't look at that in advance. So that is a look at the news for the coming week. And I think that, the megaphone, that is something to be taking a close look at for sure as you take a peek at your allocations and look back at what happened at past megaphones, and maybe it's worth making some kind of an adjustment. All right, so we're going to be right back as we take a look at the best and worst stocks for the week. All right, best stocks for the week. What we do is we look at our cycle analysis. We take a look at the stocks that have either big movers in one direction or the other, or potentially some best or worst patterns or setups. That's how we pick what we bring in this segment. So let's take a look here at one that doesn't have great cycle analysis. I actually don't look at it that much, but it is the biggest mover of the week, 16% to the upside, and that is AdTran. This is the weekly chart for AdTran, and you could see in here some huge up move in there, 16% earnings beat. Those were record earnings and really surprised all the analysts. And the best we could see in here is that there was a cycle low due right over there. You could see that. Now the lows in here are not perfect. For those of you that follow our cycle analysis, you can see in here that there was a low due right in here, and then a low due right around here, and then this is an unusual pattern in here as it formed kind of this wedge and then breaks out. Now, there's no way that we would have seen this coming based on this, and overall you could see a giant gainer in there. Now another one that we didn't see coming, and this is like, did anybody see that truck? That would be Netflix, NFLX. I was bearish in here, I got to tell you. I can show you my older projections, and then this giant move to the upside in here. The original projections saw this decline right over here, likely going to continue for a few more weeks into August. So we saw this as a continuation coming on the downside. Now the earnings in here just were a shocker. Because earnings missed, like I said, 15 cents, the PE over 200, but their international subgrowth was massive, and you get this huge move in here. I never would have thought it would get up to into this area of two different 161.8% fib extensions. Just incredible strength, and now we look for a pullback, but only a modest one before it then begins its next upside move. So just a huge amount of upside strength in there, and some pretty happy investors. And this was one of the rare times that I did an earnings play, and it had a small bearish bias in there, and well, that didn't work. Sears is another one that was a big gainer, up about 13% on the week. This is one we have been featuring as likely to move to the upside, and you could see there it has built a cyclical base. We did a video that if you want to see it, it's up on YouTube just for free to the viewing, and you can see that this is the base, and we had been looking for a rally in here, and that rally comes in a big way. Now it was much better earlier in the week, but on Thursday it had the big upside move, and then on Friday their selling came in because analysts came out and said that they're just poo-pooing the value of the news, which caused the 19% gain on Thursday, which is they are going to be selling Kenmore appliances on Amazon, and that really hurt Home Depot, Lowe's. I'm going to show you those on the worst stocks of the week, and we're still bullish in here, and we actually think it's got more upside to go based on this positive pattern. So I wouldn't be surprised to see it moving to the upside again. DDS is the next one we're going to look at, and you can see in here this stock flying to the upside. Analysts have upgraded this stock. You can see we actually think it's gone too far, or as far basically as it's going to go. It's early, it's only 2 weeks into this upside move based on the cycle analysis, but we think it's going to have a hard time. Up 11% here on the week, and remember, this is a retail big box and suffering with the rest of them, so we don't think it's got much more to go, but this was the spot that it makes sense for it to make a pretty good try to the upside. So this week in our rankings and setups, that's our level 3 membership, we put in a long side setup in one of the hotel gaming stocks. I'm not going to give away the name, but I'm going to show you 4 of them right now. They had a big week in here, as MGM is up 7%, and RCL, Royal Caribbean Cruise Lines, is up 6%, Wynn and Las Vegas Sands up about 3%. So they had a really good week in this hotel gaming group. Let's take a quick look at all of those stocks, and you can see how really positive they have been in, and MGM is the first one, which was the big gainer. Now, this stock is interesting in that we have two different cycle patterns in there to look at. It's kind of what we call a dominant cycle and a minor cycle pattern. So if I explain to you the dominant pattern, you could see that right in here. That's these big dark ones. And you can see as we have the actual pattern. This is the ideal cycle. That's what the brackets show you. But the actual trading is based on adding in a trend component. And you can see in here the upward trend. Now, there are smaller, minor cycle patterns that are in here. And you can see that, well, this pattern right in here, let's just divide this up in half. You can see that right here. That's how that one traded in a nice upward trend in bullish mode. This one, you could barely see a downtick in here and then did the same thing. And this downtick was actually stronger. That's this one right here. But then it's turned up. Now, we don't think it's got a lot more upside because of the amount of decline on that engulfing pattern. So that one might stall. This is not one that I absolutely love to be buying right now. And you can see our projection is a little more to the upside and then rolling over. However, well, let's take a look at RCL, Royal Caribbean, which has a very similar pattern. You could see that as it turned up this week also, but you could see it didn't fall quite as hard, so this one might do better and get more upside. Now, Wynn and LVS, these two are just beginning what we believe is their next upward move. So they've had this minor correction into the time period we expected the low to come. That's these two blue timing spikes. And you can see that right there. The timing is right for the advance. And this gets a pretty good upside move right now, up over 3% on the week. And we think just starting its next move to the upside. You can see Las Vegas Sands, as it does the same thing, comes into the intermediate support and then starts to move up again. So we think it is just beginning its upside move. So that's a good look at a good group as we look at the hotel gaming. Well, Wynn, LVS, those are the ones we like as the best opportunity right here. The brokerage stocks had some pretty big gains. Now, I came out negative on these stocks, at least very cautious back a few weeks ago. It was mainly because of the fact of the huge amount of competition in the commission side of it, as commissions are just plunging, and pretty soon everybody's going to be at under $5 for stock trades, and $1.20 round turn in option trades. So before you know it, that's going to be the competitive rate, and it's going to be pretty hard to make money. Now, brokerage firms make a lot of money on money, so they make the money on the money that they hold. So as interest rates go up, that's really good, right? Because they'll be making more money on the money. But interest rates have stopped going up, and all of this dovish talk, you got to wonder. So I have been, negative on it, and they have had some good weeks in here, and we'll take a look at those as what is this symbol? ETFC. Which is E-Trade Financial, is the first one we're going to look at, and the pattern has remained positive. So my assumptions have been wrong so far, and we'll see if that continues. As you can see here, bullish patterns, and you can see 1, 2, 3, and now 4 patterns where they had higher highs and higher lows. That is a consistently strong uptrend, and now the cyclical pattern only calls for a few weeks of correction before it then turns up again. So it's a while before this one is likely to make a high. Their earnings beat, and they have increased their buyback. So that is E-Trade. Now let's look at TD Ameritrade, AMTD, and you can see in here, well, almost an identical pattern, right? As it gets up near that cycle peak resistance, and of course, Ameritrade is our favorite broker here at askSlim.com. So that is a pretty good upside move, and that which we thought they'd be suffering, they really haven't. And as a matter of fact, TD Ameritrade had record account openings in this last quarter, which was just phenomenal. So you had this big upside move. So that's a look at the brokers, which had strong weeks. weeks, up about 4%. Last stock we're going to look at in the best of the week is Capital One Financial, which also had a good week. Earnings beat. Analysts love it, so they have been upgrading the stock, and the stock had a really good week, but I don't like it. What do you think about that? Cyclically, it's got a really weak pattern, and I think it's going to roll over soon. So this has our colored phasing in it and really helps you understand the rising and corrective and bearish phases. So whenever you see a bearish phase, this red one right in here, the odds are high that the next rally is going to stop at resistance. It's not going to be able to get to a new high. You see the red period right in here? Look at where it stopped, below the cyclical peak over here. So sometimes it's at the 618, sometimes it's at the 78.6. This one got closer to the 78.6. So I think maybe a little bit more in here, but then I think it's going to roll over into this corrective period over here, which takes you out in towards November, actually. So this stock, a big week this week, and overall, I would say I don't love it, and I think that Capital One Financial is a sell pretty soon. All right, so that's a look at the best of the week. Let's take a look at the worst. All right, for the worst of the week, I mean, there is a stock that has been absolutely bludgeoned over months and then takes it again. That is Chipotle. The word is that more than 100 people got sick in a Virginia restaurant, and they have really suffered with people getting sick. There's also some talk about, I don't know if this is just hearsay. I hate to spread rumors at all, but I heard something about mice. And so I don't know if that's true, but that's just what the news reports are. So this stock really got hit, and people got really sick. My wife and I both had norovirus once. And it was horrible. So I know how I feel for those people that have gotten that sick. Chipotle moves down from 750, breaks all the way down to into the 300s, loses more than half its value, then does a beautiful Head and Shoulders bottom, and then almost makes the Head and Shoulders measurement to the upside. But then this news comes out, and man, oh man, you could see it gets bludgeoned again as it falls from 500 down to 344 as it makes a new low this week. This is a very important spot it's on. You see this big green line? That's an old cycle, a major fib, actually. And let me just take a little closer look so you can see that. So this is a very important area for it right here, but based on the cyclical patterns, and you can see the decline into the nested period here, the decline into the nested period here. Nested means there are two cycles, a longer and a shorter one, that are making a bottom at the same time. This is the one that made the right shoulder, so it made a higher bottom, but you could see the decline in here. And here's that nested bottom out here in late August or early September. So this thing has another month potentially, and I don't think that 78.6% number in there is going to hold. I don't have the next support in there for you to see, but that one looks really bad. So Chipotle, really a sick stock with people that got sick in their places. I like Chipotle. I go to it all the time. The food is great. So, but they're going to have a hard time restoring confidence to their user base, and that's the issue for them, as they will continue to struggle for a while. So the worst group of the week was the airline stocks. They talked about that in the early part of the show. United Airlines down 9%. Save was down 6%. You had Delta and American down 4 and 5%. So these stocks were really weak. There was one of the biggest problems was that United talking about guiding lower on their revenues, guiding lower on the amount of travelers that use their what they call seat revenue, and that has put a lot of pressure on United Airlines. Let's take a look at these airline stocks as they have rolled over and led this transportation to the downside. United Airlines is the first one we're going to look at, and you can see our cycle patterns in all the three majors right in here as we have them all lined up together on the bottom. They were all pointing to declines in this period right over here, and you can see as they move down sharply. So pretty good support zone right now, and we're getting near the bottoming period. So we think it's going to hold in here and then get a bounce, but you could see the bounce we're looking for is a few weeks and probably not all that far before it then starts to roll over again. That's United. Here is American right in here. You could see the same thing. We're looking for a couple of weeks down, but this is a more bullish pattern, so we're projecting it to be able to make a new high after this. This is a better pattern than we saw in United. And take a look here at Delta. You could see that right there, and this one rolling over pretty harshly right there. So another month or so we're projecting on the downside in Delta. So if they get a bounce, we think it's not going to last long. And you can see here the worst pattern of them all, Spirit Airlines, as this low-cost airline now is fighting the fact that, well, all of the majors are bringing out these economy where you can't bring any luggage on the airplane. You have to check it. The prices are a little bit cheaper. It's competing with these bare bones airlines, and you can see in here a major top that looks like it's made. Note this peak right over here, pretty much a major double top or M top that formed. Note this low right over here. It comes all the way down to it with approximately 3 weeks to go left on the downside. This is a bearish pattern because it's come back down to this level, so we would expect some rally for a few weeks and then lower lows going on the downside. So a bad group in there as we look at the airline stocks. So mostly it looks like American is the best pattern in there, but overall we think that transports are signaling a lot of problems, so we would be cautious certainly in that group and not be buying the dip yet, certainly in there. Northern Trust is the one financial that I'm going to show in here, as it has had a huge hit. Now, I made a bad call in the beginning of the year, essentially putting this on my list of the riskiest 18 for 2017, and the stock had just a monstrous move in here, and I believed it was the most expensive of all of the bank stocks, and I thought that, well, you know, bank stocks were going to falter. This was the one that would really have problems, and you can see it's come up from some 75 to now being up around 85. It was up around 100. I actually think it'll give up a little more ground, try to rally, and then get hit again, but overall it has not been a good call so far, but you can see the pattern in there as it's shaped up, down 10% on the week. Talked about airline stocks in here. Let's put up CSX, which is one of the other stocks that are in the in the transportation category. This one moves down 7%. Their earnings beat and they added a buyback, but then they warned. Really weird. So they're buying their stock and warning because it's more of this financial engineering stuff that's going on. So we have, I think, a break here of another 2-3 weeks, another attempted rally, and then down again. You can see all of these patterns in here are, I think, setting up for failing rallies at some point. And then much more harsh treatment of them later on. Talk about harsh treatment. How about Qualcomm in here? The Qualcomm down 5% on the week. Their earnings miss. They're really battling in this battle with Apple and badly missing the royalties that they got from Apple. So you can see in here as there was this giant gap on the downside over here based on that problems with Apple. And note these cycle lows. See this one right here? That called for a low and a rally, calls for a low and a rally. You could see that, a breakdown which calls for a long decline, and you get it. And then the rally up to the 34 week, which is often resistance, and rolling over again. Here's 6 more weeks of decline out ahead of you. Qualcomm, a bad looking stock. And we'll stay in the techs in here. One more in techs we're going to talk about is IBM. IBM, that's down 4% on the week on top of really being in a strong downtrend. We have been consistently negative on IBM. They beat on earnings, but for the umpteenth time, their revenues missed. They're really struggling with adoption in the cloud category, and that has been a problem. They're really their legacy business is really weighing on them, and finding this their way into the new world is really been a struggle for them. So take a look here at IBM, and you'll see this pattern in here. We've had it in this big red zone forever, right? And then you can see we talked about this bear flag, and it was likely to go down again into this timing period of the next week or so. So we think it's about to bottom, and you can see the way we have it projected in here, that pretty soon it's likely to bounce and get a bounce in there. But bounces are not likely to be very good. Maybe it bounces from 145 to 155 in coming month or so. But then after that, we think it's going to continue to be in a bad struggle. So we talked about the fact that Sears, which had this big week, Sears has come out and said that they were going to sell Kenmore appliances on Amazon, and of course the appliance sellers got hurt on that. That's Home Depot, Lowe's, they took some pretty good hits. Whirlpool even went down. GE, which, you know, it's a small part of its business, if there's anything left in the appliance business, is also has had its own rough time in recent weeks. The two I want to show you are Home Depot and Lowe's. We were negative on these, believing that they had made a top and were rolling over. Home Depot in a very important spot. You could see that we have that highlighted for you with this line. You could see the 34-week moving average, that last cycle low, all in that spot, and it will confirm a major top under this 145.80 area, and I believe that it will. You could see it still points down for the next couple of weeks, and it could be some pretty good downside movement in there. Lowe's, you can see right in here, even worse, as it had a major breakdown already way up over here at 81, turned into the negative cycle, into the declining phase right over here, and that is due to bottom around the end of July right there. So both Lowe's and Home Depot looking like a couple of more weeks, and then a potential failing rally after that. But both of those look really poor, and that is a look at stocks, more stocks that are getting hurt by Amazon. And the government is starting to look at Amazon, and you know me as a libertarian, stay out of it, because ultimately the consumer benefits from the demise of companies that can't keep up. And then more competition comes in, and prices fall, and we buy things cheaper, and we buy things easier, and they deliver it faster, and our life is easier. And what's wrong with that? So government, stay out of it. How do you like that? All right, so that is a look at the worst stocks for the week. And let's just take a look at what we do here on our 2-year anniversary at askSlim. All right, before I get into the short-term view for the coming week, I want to tell you that, you know, because this is our anniversary and I feel like it's a celebratory day, I'm going to make, for the next week, all of our specials available to you. If you want to see all of our 9 categories of videos, more than 250 videos, you will be able to see that for a half price for 1 month. Watch all of them for $16.50. How's that? And if you want to get our level 2 membership, a level 3 membership, which is our rankings and trade setups, amazing table with all of the analysis on 80 of the best traded symbols, plus all of our 9 categories of videos. Half price special for 1 month. You can watch it all for only $43. And if you love our charts and you're a TOS user, Thinkorswim, and you want to have the 80 best traded charts with all of our cycle analysis right on your platform, that's new. We're gonna have a link available in the next week for that. So I can give you all of those, have all of our charts, plus rankings and setups, and all of our videos, all of that for a special half price of only $64.50. So just an amazing, huge amount of analysis, an unbelievable amount of learning. Write me at slim@askSlim.com. Tell me specifically whether you want level 2, the videos, level 3, all of our rankings and setups, or you want to have our charts and everything. Let me know in that email, slim@askSlim.com, and I will send you a special link for those, and you'll be able to have a whole month of amazing amount of marathon viewing. So what's now? A short-term view for the stock market for the coming week. All right, short-term view of the stock market for the coming week. What we do is we do analysis of 5 major markets, and then I bring the analysis of the stock market to you here on the show regularly. In our member version, I'm very accountable to how things went during the previous week. In fact, I shared that last week, and this was actually a difficult week. The analysis was not close on a lot of the markets, and greatly affected by the ECB and all the dovishness this last couple of weeks out of the central banks, and it held markets up more than we expected, not getting it right on the bond market or the gold market. The stock market, we expected that it would be able to move up to a resistant zone that was between 2460 and 2470, and it popped up to 2477 and then pulled back into the zone. We don't get much credit for that, though we thought it would be a week that was lower. It's a little bit higher, but the Dow Jones is lower, so that's a lot of double talk that says basically we missed it. We were right on the Dow, but not a strong week for us on the short-term analysis. I always want to be really accountable to that, because when I tell you it's right, I want you to believe it's right. So take a look here at our short-term view for the coming week, and what you can see right in here is that we had anticipated that the market would pull back into the late part of this week, and we thought that this pattern in here would get you down like this, and we thought we'd get down to about 2442 to 45 and then have a rally again. But it continued up in here and then started to pull back. So you could see that pattern right in here. What that says to us is that we're likely to, in the early part of the week, have a little bit more downside correction right in here, potentially stopping at the 23%, but maybe getting down to the 38%. That's the top of that rising support zone. So supports come in at around 2462 down to about 2452, right in that zone, and then we think it bounces again. The pattern we're looking at is right in here, and then towards the end of the middle to the end of next week, right in there, and the following week, we get into another one of these periods of extreme risk. So we're looking for some choppy action coming up here in the next week, and then not making any real upside ground at all, with the potentials of the market hitting into a period of air pockets on the downside based on the cycle analysis in coming weeks after that. So that's a look at the S&P 500 and our short-term view for the coming week. I hope you've loved the show. Hope you help us celebrate. We have a huge team that helps us with our website development, website management, membership management, marketing guy, and of course Arvi that helps me with all of the analysis that you see. So help support us and take advantage of those great specials that we have for this week. And I want you to be careful because it is crazy out there. And I'm always wishing you great trading.